Hey everyone, welcome back to Corporate Decoder, the place where we decode the mysteries of big business, and today we're looking at Nakamoto Incorporated, which just pulled off a pretty interesting move, kind of like pulling a rabbit out of a hat with two other companies. Alright, Nakamoto Inc is making some big waves. They've just announced they're exercising a call option to acquire BTC Incorporated, and it's all happening at the same time as a merger with UTXO Management GP LLC. It sounds complicated, but let's break down what this really means for Nakamoto and its shareholders. So, this filing with the US Securities and Exchange Commission, or SEC, is an 8K report, which is basically a heads up that some big, important stuff has happened. And for Nakamoto Incorporated, that definitely includes these two mergers. Before we dive into the nitty gritty, remember to hit that subscribe button if you want more of these deep dives into corporate filings. And if you are looking to chat with other finance fans and get more exclusive content, join our Discord community. The link is in the description below if you haven't already checked it out. Nakamoto's main thing is its common stock, which has a very small par value, just 1/1000th of a dollar. Basically nothing. They also have these things called tradable warrants, which give people the right to buy their stock in the future. Now, something interesting is that Nakamoto is calling itself an emerging growth company. This means they're likely a newer company that's still growing and gets some benefits under us financial rules. They've also elected not to use some extended transition periods for new accounting standards, which suggests they might be confident in their ability to keep up with new rules quickly. The main event here is Nakamoto deciding to buy BTC Inc. They're doing this by exercising something called a call option. Think of it like having a coupon to buy something at a set price. This option was part of a bigger agreement called the Master Marketing Services Agreement. Nakamoto got this option through another deal where they took over the rights from Nakamoto Holdings. So Nakamoto is saying, we're taking up our option to buy BTC. And as part of this deal, they're also agreeing to issue shares of their own common stock to the sellers of BTC. The price for these shares is set at $1.12 per share. The board of directors at Nakamoto unanimously agreed this was a good move. But it doesn't stop there. At the same time, Nakamoto is also entering into a merger agreement with BTC. This means BTC will merge with a new company created by Nakamoto called BTC Merger Sub. After the merger, BTC will become a company fully owned by Nakamoto. Again, the Nakamoto board gave this their full approval. There was a bit of a tricky condition here. The original agreement required BTC to first buy something called UTXO Management GP LLC. But in this new merger agreement, Nakamoto and BTC have agreed to consider that condition met once the UTXO merger is complete. They're basically streamlining the whole process. They also tweaked how they measure the value of BTC. Instead of looking at the last year before the option is exercised, they're now looking at a period starting no earlier than January of 2024 and ending at the end of a quarter at least 60 days before the option was exercised. This could potentially affect how BTC's value is calculated. Now for the big numbers, all the existing shares of BTC, both common and preferred stock, will be exchanged for a whopping 336,804,102 shares of Nakamoto's common stock. This is after setting aside some shares for BTC's own stock options. This is the BTC consideration, and it is subject to adjustments for things like cash, debt, and how much money BTC has in its bank or owes, based on Nakamoto's stock price of about 29.5 cents on the 13th of February. This BTC deal is worth roughly $99.4 million. This was calculated by dividing a base value of about $377 million by the fixed share price of $1.12. These Nakamoto shares being given out will have some restrictions on them, meaning the sellers can't just immediately turn around and sell them all. A portion of the Nakamoto shares that would normally go to the BTC sellers will be held back. These are called holdback shares, and they're like a security deposit to cover any potential issues with purchase price adjustments, or if BTC had to pay out for something later. If any BTC shareholders have rights to get paid differently under Delaware law, their shares won't be converted into Nakamoto stock. They'll get whatever is determined to be due to them under that law. These new Nakamoto shares are being issued without being officially registered with the government for sale to the public. They're relying on exemptions like Section 4, Add 2 of the Securities Act, which is usually for private sales to sophisticated investors. The companies are also aiming for this whole merger to be treated as a reorganization for tax purposes. This usually means that the shareholders receiving new stock don't have to pay taxes on it right away. A condition for this deal to close is that there are no objections from antitrust regulators, like those under the Hart-Scott-Rodino Act. They're basically checking to make sure this merger doesn't create a monopoly. If this BTC merger doesn't wrap up by May 18th of 2026, either side can walk away. However, if one party caused the delay, they can't use that as an excuse to back out. And if things go wrong and the deal falls apart under certain conditions, the party responsible for the breakdown will have to pay the other side $5 million. This is called a termination fee, and it is meant to cover damages. It's worth noting that the full merger agreements aren't always shown in these reports. Nakamoto has filed them as exhibits, but they've redacted some parts, meaning they're keeping certain details confidential. Now let's talk about the other part of this deal. The merger with UTXO. Just like with BTC, Nakamoto is doing this through a subsidiary, Utah Exo Merger Sub. And just like before, Utah Exo will become a wholly owned subsidiary of Nakamoto. The Nakamoto board also approved this one unanimously. For the UTXO merger, all of UTXO's equity interests will be exchanged for 26,785,714 shares of Nakamoto common stock. This is the UTXO consideration. This makes the UTXO part of the deal worth about $7.9 million, based on the same $1.12 share price. This number comes from a base value of $30 million divided by that stock price. And again, these shares will have restrictions. To make sure everything was fair and square, Nakamoto actually set up a special committee made up of independent directors. They hired lawyers and financial advisors to look at these deals very carefully. This committee found the mergers to be a good idea and in the best interest of Nakamoto and its shareholders. The audit committee also gave its approval. This was especially important because some key executives at Nakamoto, like the CEO, Chief Investment Officer, and Chief Commercial Officer, are also involved with BTC and UTXO. Since they'll be receiving Nakamoto stock in exchange for their holdings in BTC and UTXO, it makes sense to have an independent review. Back in May of last year, Nakamoto shareholders already gave the thumbs up for issuing a large number of shares, up to 600 million, at that $1.12 price. This was needed to comply with the rules of the Nasdaq stock market. Now, about those shares being issued, the people selling BTC and UTXO, the ones getting the new Nakamoto stock, will have to agree to a lockup period. For the first 6 months after the deal closes, they can only sell 50% of the Nakamoto shares they receive. Then, for the next 6 months, they're restricted on the remaining 50%. This is to prevent a massive sell. Off that could crash the stock price. These descriptions of the merger agreements are just summaries. The full details are in the actual agreements filed as exhibits with this report. This section just confirms that the Nakamoto shares being issued in these mergers are not being registered with the SEC, they're selling them privately, relying on those exemptions we talked about earlier. On the 17th of February, just a day after these agreements were signed, Nakamoto put out a press release announcing these deals. They also posted an investor presentation on their website, which gives more details about what is happening. And as is standard practice, they've included a section on forward-looking statements. This is basically a disclaimer saying that anything about the future in this report is just their best guess and could change. They're talking about potential synergies, market expansion, and how these mergers might impact their business. They're also mentioning Bitcoin-related strategies and treasury management, which signals a continued focus on cryptocurrency. They're also upfront about the risks, including the unpredictability of Bitcoin's price and the challenges of integrating these new companies. They basically say that actual results could be very different from what they're hoping for. Finally, they list all the official documents that back up this report, like the merger agreements and the press release. And here are the signatures with Terry Gendron, the Chief Financial Officer, signing off on behalf of Nakamoto Inc. So what is the big picture here? Nakamoto Inc. is making a significant move to expand its business by acquiring BTC Inc. and UTXO Management LLC. This isn't just a small purchase. We're talking about issuing tens of millions of dollars worth of Nakamoto stock. The fact that they're an emerging growth company means they're likely aiming for rapid expansion. The simultaneous mergers suggest a strategy to consolidate operations efficiently. The company is clearly betting big on integrating these new entities. The stock being issued will be restricted for a while, which is a smart move to stabilize the stock price after the deal, but it also means the sellers are committed to Nakamoto's future. The tax-free reorganization status is also a positive for those involved. However, the biggest risks, as they themselves state, are the integration process and the volatility of the cryptocurrency market, especially considering their mention of Bitcoin strategies. If Nakamoto can successfully integrate BTC and UTXO, and if they can navigate the crypto market ups and downs, this could be a game changer for them. But if those integrations are rocky, or if the crypto market takes a nosedive, it could be a major setback. The reliance on Bitcoin treasury management is a high-stakes play. What are your thoughts on these mergers? Do you think Nakamoto is making a smart move, or is it too risky? Let us know in the comments below. If you found this breakdown helpful, Please give this video a thumbs up and subscribe for more in-depth company analyses. And don't forget to join our Discord community for more discussions and exclusive content. Thanks for watching, and we'll see you in the next one.